Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. All right, today we are talking about payroll taxes. Now, this will not be a video showing you how to file payroll taxes. This video is for you to gain an understanding of what payroll taxes are and when they need to be filed. Because at the end of the day, as a business owner, you ain't got time for this, okay? You need to outsource this task in your business so that you can focus on growing your business than trying to do all this stuff, okay? So let's talk about these payroll taxes. And, actually, I'm going to start by giving you a history. How did we even get here? Because, many moons ago, we didn't have payroll taxes. We didn't have withholdings. The way it worked is that at the end of the year, you filed your taxes and then you paid what you owed in quarterly payments the next year. But somehow that changed, okay? So what had happened was the withholding that we know now, that we have been experiencing for, gosh knows how long, actually came during World War II, because basically our government needed more money hunty. And they needed it more frequently throughout the year. So the federal budget rose, listen to this, you guys, from $9 billion in 1940 to $98 billion in 1945. That was our budget. Like, wow, right? When you really think about that. So that's when Congress passed the law, the Current Tax Payment Act in 1943. And that's really what established the payroll tax system that we know now. Because the first one that we had, that was in 1913, that ticked off a lot of employers, and they repealed that one. And then so, here we are with the one that has been established since 1943, and that's what we have. So your payroll taxes are threefold. They're your Social Security tax, which is 12.4% on the first $132,900. That is up starting in 2019. Previously, it was $128,400, I think. Your Medicare tax, which is 2.9% on all earnings, and then your federal and state income taxes, which is based on the amount that's withheld, is based on your W-4. So employers are required to withhold these taxes, okay, and submit them to the government. You pay half, and then the employer pays half, okay? And so employers are required to send these payroll taxes on a monthly basis, and some are twice per month. And it really just depends, on the amount of payroll taxes that you have and how current you are. And there are some states that require them even more frequently than that. So you got to know what your federal requirement is as well as your state requirement. There are only 7 states, I do believe, that do not have a state income tax. So 9 times out of 10, you're in a state that has a state income tax, okay? But now, so then that's what the payroll taxes are. The things when you have a job, W-2s come out of your check. Employers, when you have employees, and this is your job, okay? Your job is to withhold these payroll taxes and submit them to the government. Now, employers are also required to file the employer's quarterly federal tax return. Is commonly known as 941s, based on that's the form number that you file quarterly. Now, this is for employers, not just single business owners, okay? So employers are required to file by April 30th, July 31st, October 31st, and January 31st for the fourth quarter of the previous year. That's when the 941 quarterly forms are due. If you have, paid your taxes, then you can get an additional 10 days to file that, but you just want to file on time, okay? And you see, this is why I'm telling you, and I will continue to tell you, to outsource this, because you got too many dates and deadlines that you're dealing with your taxes that you don't have time for this. Okay, you just really don't. And where the confusion comes, there's confusion among business owners with employer quarterly filings and paying federal estimated taxes or state estimated taxes. These are two different things. Your estimated taxes, which are due April 15th, June 15th, September 15th, and then January 15th of the following year normally, that is for your personal taxes. Or if you have a C Corp, then this also applies to your C Corp. But all the other business entities, a partnership, S Corp, all those are pass-throughs and those go to your personal returns. So if you are a sole proprietor or a single member LLC and you don't have employees, then the only thing that you may have is estimated tax payments. That's on the personal side. But on the business side, when you have employees, that's when you have the employer quarterly tax return that you need to file. Okay, so please keep the two separate because there is still some confusion about that. So, then what? So again, like I said, you got all these dates floating around that you got to meet, and we just don't have time for all that. Okay, like seriously. But this is also for S corps as well. If you have an S corp and you are the sole member of that S corp, as an S corp, you, the owner, are required to be an employee of the business. So yes, you have to withhold employment taxes, and yes, you have to file the quarterly 941s. And yes, you may have estimated tax payments on the personal side. So yes, all of that still applies to you if you are an S Corp and you're the only person. Yes, all of those rules apply. This is why you hear me say time and time again, if you are considering moving from, a single member LLC or even forming an S Corp, you need to be able to outsource all of this stuff so that you can focus on growing your business than to be worried about filing all these taxes. So now payroll tax filing is separate from income tax filing. Two totally different things. So yeah, the other thing is that, there's also the annual federal unemployment tax return. That's an annual return. That's a federal 940. Again, that's a whole nother subject, but just know that it's different. There's lots of different tax requirements for different areas of your business when you have employees. This is why you outsource. And I keep saying that over and over again because the administration of a business, when you start to have employees or when you start to have an S Corp, it's a lot. And for you to make sure that you pay, you collect the payroll tax, you file, you deposit the payroll taxes, you file the quarterly 941s, the annual 940, file your own personal taxes, pay your own estimated tax payments. That's a lot. Okay, that is a lot for one person, and this is why you need to outsource that. Whether you have a person that you hire in your business to maintain these things, or you outsource them to a company. You don't want to try and do all of this on your own because, baby, when it comes down to those payroll taxes, the government does not play. They have what's called the trust fund recovery penalty. And this is when small business owners are generally the biggest offenders when it comes down to payroll taxes because what happens is small business owners get in a cash crunch and your employment taxes are being held in trust. You're holding these employment taxes to send them to the government. So you're holding them in trust. That's why it's called a trust fund recovery penalty. It ain't for, like rich people trust funds, the wealth. No, that's not what this is. Okay. But the penalty for not paying employment taxes is ugly. And if you continually, negate paying these payroll taxes, they will shut your business down. The government will shut your business down because they're saying, hey, if you can't pay your payroll taxes, then you don't need to be in business, and they will shut you down, federal and state. State usually comes faster than federal, but they both come, and they come with teeth for this trust fund recovery penalty. And the reason is that when employees who have, you have as an employer, you have withheld those payroll taxes. They go and file their taxes and they file for a refund that they are legally entitled to. But you, the employer, have not paid this money to the government, and so now the government has to pay out money that they haven't even taken in yet. So when they come for some payroll taxes, they are coming deep with like really sharp teeth. Okay, so just to let you know. And this is why I say, outsource it to a payroll company who knows their deadlines and all of that. And you as the business owner, you still don't go to sleep. You still make sure that, the payments have been made, and then you keep it moving. And if it's not made on time, then you need to find out why and then find somebody else if they're not doing, the company that you hired is not doing what they're supposed to do. Okay. And also, if you hire someone in your company to be responsible for these payroll taxes and it doesn't get done, people can be held personally liable for failure to pay payroll taxes as well. So yeah, payroll, don't play. That's all I'm saying is don't play. All right. So I hope this helps you out in really understanding where you are with payroll taxes, filing payroll tax returns and all of that. This was not going to be a how-to video because as a business owner, I don't think you should be doing this anyway. That's the world according to Lusandra. There are plenty of videos that's out there that's going to tell you how to file these forms, but I'm telling you, invest in professionals and spend more of your time operating in your genius and making the money to pay these people to do what they're supposed to do instead of you trying to do it all yourself. Okay? So that's it for today's episode of Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come right here to get your questions answered about your home business taxes. All right, have a great day, and I will see you all next time. Bye.